Hey, Scarlett, it was the biggest sell-off across the Asia-Pac in a month. Markets dropped from Tokyo to Sydney following the falls that we saw on Wall Street overnight. I'm going to bring you up to date on the closing numbers across the Asia-Pac. And as you mentioned, Japan was the biggest loser with the Nikkei 225 close to that 3% mark. The broader topics lower by 3 1/3. Hong Kong also closed down close to that 2% drop as well. Now, the declines today were led by commodity plays. The sector fell along with the price of metals and oil, and that include some of the world's biggest miners and oil producers, including Asia's biggest oil company, PetroChina in China. Meantime, it was a day of losses for Japan's famous brand name makers. These exporters fell as the yen strengthened over 1.5% versus the U.S. dollar. Also, a New York manufacturing report came in weaker than forecast, and that could mean lower sales for these companies. Staying in Japan, and the country's central bank is sounding more upbeat these days, though. The Bank of Japan says the worst recession since World War II is now easing after exports have improved, and also industrial output rose the most in close to 60 years. The BOJ on the day left interest rates on hold at 0.1%. There wasn't really much room to move. They are the lowest interest rates among industrialized nations. And also, shares in China's second biggest insurer, Ping An, today dropped after Citigroup cut its rating on the stock to hold after it bought a 30% stake in a Chinese lender from Texas-based buyout firm TPG. Now, investors think that Ping An really overpaid for these shares, basically paying 22 RMB a piece from TPG. And quickly down in Australia, one of the biggest movers today was Sydney. In Sydney was television and radio transmission tower maker. This is Macquarie Communications. The Canada Pension Fund Investment Board has raised its takeover offer about 20%, valuing this deal at $1.3 billion. Who says M&A is dead?